right, welcome back to the Know Your Numbers REI podcast. My name is Chris McCormack. I'm the host of this podcast, also the founder of Better Books, where my wife and I are leading a team that wants to lead others into significant tax savings. We know that a lot of business owners, entrepreneurs, real estate investors, high income earners are busy. They don't want to take the time or the energy to study the tax code, understand the tax code, know the tax code. And so we come alongside you to do just that and to eliminate some of the frustrations and the concerns that you have around your taxes. We have been doing a 7-part series on the big costs that people run into when it comes to taxes. We've covered things like entity structuring, we've covered things like retirement planning, we've covered things like income sources and types of income. And today we're going to be wrapping it up and tying a bow on all of it with the topic of deductions. And you might be like, we really went 7 weeks and we're ending this on a topic as simple as deductions. But I promise you that there is something for you to gain. And by the end of it, I want you to have a little more clarity as to what qualifies as a deduction, what does not qualify as a deduction, how you can use deductions to better plan for taxes. Because again, I meet with hundreds of owners of businesses, owners of real estate, owners of interests in businesses, and I can't remember the last time where I was like, I think you've got every deduction that you've qualified for. A lot of it is because we've just never been educated on it, right? We go through the school system and we learn things like English and writing and mathematics and science, which have their place, but they never teach us anything about taxes. And then we do a lot of self-study and we're on YouTube and Instagram and hearing this versus that, and it never seems to align, right? I can go and pull up 2 different tax professionals who say 2 different things on what you can and can't deduct and what's gonna cause you to get audited or lose an audit or not get audited or be free from an audit. And so it can be confusing. It can feel like things are not synchronizing in a way that they should, because something like the tax code seems like it should be pretty black and white. And so today I want to, again, wrap up this conversation on the 7 biggest tax mistakes to talk about deductions, because the truth is that most people are overpaying on taxes because they either don't know that they can deduct things or they're not maximizing their deductions by not thinking about it in the right way. We've had clients from all different stages of businesses, from just getting started to a couple $100,000 to millions and millions of dollars in revenue, and a lot of them are missing out on deductions or maximizing that deduction amount. I can think of one of our clients. They own a legal practice and real estate investments, and I was reviewing their books on the real estate side, and I realized that the way that they were capitalizing certain expenses was resulting in a higher taxable income amount, which was resulting in a lower write-off against their large income on the legal side. And because, so they from a bookkeeping standpoint, they were getting the expenses onto their books, but they still weren't maximizing the deduction to lower the taxes to the lowest possible amount. And all of this is within the law, and all of it is legal. It's just a matter of not knowing and not being educated and not having the right team in place to say, hey, I think you can make better use of this. And so we're working with them to make sure they're aware of everything that is available to them. So when I say deductions, you might know that you can deduct certain things in terms of supplies or resources or home office or vehicles, or you might know that you can depreciate things in the real estate space. And you're like, yeah, that's fine. I know that. I don't need that. But are you doing it to the best of your ability? Are you getting the maximum amount of deductions. And I've covered a topic on depreciation. That was one of the 7 topics, because it's so prevalent, is that people are missing out on the maximal amount that they can deduct as it relates to real estate in investment properties. But this is a far wider range. And so I don't want you to be like our client who was, before becoming a client, was overpaying in taxes on their income from their law practice, the wives' law practice, even though they can use real estate to offset it because the husband is a real estate professional. That's another topic. I want you to be empowered as a result of this conversation, to know, to think differently, because that's half of it, is just thinking differently. And so I think that's problem number 1, is that we're not approaching this in a creative way, right? I believe that every one of us is created in the image of God. And I believe that God is a creator. That's part of who he is. He is creative. And so we, in our highest purpose and our highest calling, have creativity as a part of who we are. And so when we think about taxes, it might not sound like it's the most creative thing, but there's a way to bring creativity into the tax conversation to then pay less in tax, keep more money in your accounts, eliminate some of the frustrations and the fears around taxes, because you're doing it in a way that is creative and in line with what the tax code says. Section 162 of the tax code is a big part of this. It basically says that any expense that is ordinary and necessary in your business can be deducted against your income. So ordinary and necessary. We have to think about, how can I use this wording to allow me to deduct things and also stand up in the face of an audit? Because people will point to section 162 and just say, yeah, there's a watch that you need to appear on a podcast, and that watch communicates something, and because it's a part of your presentation on the podcast, then it's ordinary and necessary. But the tax code and court cases that have made their way through tax courts here in the US would say that that is not a business expense. So there are clear guidelines as to what is ordinary and what is necessary. And some of these things that people promote as a form of tax strategy is not true and needs to be avoided. But that's not to say that there isn't a way to think creatively about that ordinary and necessary topic or category of expenses. So what can we take? Education, for example, right? In order to improve on your business expertise, the way that you run a business, the way that you show yourself, the way that you market, you need to be educated. You need to have an understanding of what it means to run a business. How can you properly advertise? How can you properly sell? How can you properly promote yourself? So maybe you go out and buy a book on Facebook ads. Now, that might be a book that is clearly a business expense, because you're not going to be using Facebook ads for your personal promotions, unless maybe you are. But that is a business expense, a book specific to Facebook ads. But let's take a book like some of these books behind me, Jordan Peterson's 12 Rules for Life, right? In that book, it's not necessarily a business related conversation, but I have applied some of those books to the way that I approach in business. Some of those topics, that 12 Rules for Life, one of the rules I believe is act like the person you are talking to knows something that you do not. And basically it's saying, apply humility to your life. And when you're having conversations with people, treat it as a learning experience. Try to learn something from that. And if you are applying that to the way that you are going about in business, you will succeed. You will learn new things. And so those books, the 12 Rules for Life, the Beyond Order, the We Who Wrestle with God, that has an impact in my business. And so now I know that because I'm using it for business purposes, it qualifies as a business expense. Same thing goes with supplies. Same thing goes with home office. Are you using your home for business related purposes? If so, then part of that can qualify as a business related expense. We have a client who they operate a business out of their home. They have to repair their driveway. And because their home is their principal place of business and we qualify for the home office deduction, even though that repair is not specifically on the office, we are creating a plan and implementing that plan to use some of that expense to deduct against their business and do it in line with what the IRS puts forth. So you can see how this can, one, be an advantage, but two, needs to be properly approached. Because if our clients who are repairing their home and the outside of their home, which is also their business, were just left to their own devices and just trying to do this on their own, they would fall short. They would not know what documentation is required. They would not know whether that can qualify as a deduction. And when you don't know, most people exercise on the side of caution, especially as it relates to the IRS and taxes. And so they end up paying more in taxes, even though they would have qualified had they teamed up with the right person. So the grand topic that I want to cover, and I am covering right now, is the fact that most people are overpaying in taxes because they don't use all of their expenses. As a business owner, you are using certain things in your business that help you push the business forward. I have a phone here, and my beautiful family is on the phone, if you guys are able to see online. We know that this phone is used for business purposes. I'm going to get on this phone and I'm going to talk to clients. I'm going to send emails. I'm going to send texts. I'm going to post on Facebook related to our business and what I think people need to know about taxes, especially as we approach tax deadlines. And so this phone is used for business purposes. That said, I also use it for personal purposes. I have to be able to determine how much of this phone is used for business purposes, how much of it is used for personal purposes. Should I have another phone just so I can have one phone for business purposes and another phone for personal, and I can get a full write-off for the phone that I use for business purposes? These are all parts of the conversation that play into you paying the lowest amount of taxes possible. You can write off the purchase of a phone. You can write off the phone bill as it relates to the business use. Same thing with vehicles. Some people understand that you can write off vehicles if they're in the business, but they don't know how to best document that. They don't know how to make the best use of that. Do you write it off and depreciate the vehicle? Do you use all of your expenses that you've paid to maintain the vehicle? How do you go about this? These are all ways that are available for you as a business owner to use the tax code to your advantage, but there are also ways that are likely resulting, if you're not teamed up with the right people, resulting in a higher tax amount. Depreciation. We've done an entire episode on this. What can you depreciate? Can you depreciate the car? Yes. Can you depreciate your laptop? Yes. Can you fully expense these things? Yes. And all of it is lined out in the tax code, and there are certain requirements that we have to meet. For the car, for example, you have to use it for a certain amount of time in business purposes in order to qualify. And so you can make sure that's documented. For the technology, for equipment, there are parts of the tax code that allow you to expense it fully in the first year that you invest in, even if you used leverage to purchase such things. Okay, so then it's what part of the code tells us that? How do we apply that on the taxes? These are all fringe benefits, insurance, HSA contributions, retirement accounts. Those are all personal or accounts that benefit you personally, but they can also qualify as a benefit from the business side when you own the business. These are all things that I have seen with my own eyes. People end up overpaying on taxes because they either don't know how to make use of it or they don't know that they can make use of that. Both of those are issues and result in large tax overpayments. But the good news is that you can save as a result of applying these strategies. As a business owner, you have to be thinking, how can I make this expense business related? And if the answer is that if there is even a hint of possibility that you think you can make a personal expense business related, then it's time to plan around that. Then it's time to hire the right people, because there's two scenarios that are true. One is that Most people are overpaying because they don't know that you can expense a lot of what you can expense. You can get a deduction, offset some income, save on tax. The other scenario is that you understand that you can save on tax by writing things off. So you just write off everything from clothes to watches to travel to you name it. And the problem there is that it might feel like it's leading to tax savings, but it's resulting in greater risk because it's not in line with the tax code. There are personal expenses that also serve as business expenses that can come on the business and save on tax, but there's also personal expenses that are not eligible for deductions that you need to be aware of and should not be applying as a tax savings strategy. So the call to action is, do you know your numbers? Really? Do you know what you're writing off? Do you know what you're able to be writing off? What you are capable of writing off? Get your most updated books, get your most up-to-date numbers, and start to go through line by line. What am I writing off? Am I eligible for writing this off? Could I be writing off more? I think the biggest ones are travel, supplies, meals, and fringe benefits. Those are ones that we see regularly with our prospects who then become clients, that there is a way for them to make better use of there's a way for them to approach it better than they are currently doing it by the time that they are on the other side of a phone call. When they hire us and now we're their tax planner, we're able to strategically implement those approaches and do it in a way that allows them to be properly documented and properly applied so that they're not only saving on taxes, but doing it in a way that is legal and ethical and in line with the tax code. So I encourage you to do that. If you are wondering if there is even a shadow of a doubt that you are missing out on tax strategies, tax write-offs, deductions, personal expenses that can be business expenses, then you need to align yourself with a tax strategist who is not only going to show you ways to save on tax, but do it in a way that is in accordance with the law so that you can, yes, save on tax, but also protect yourself from unnecessary audit liability. If you're not sure where to go for that, we would encourage you to reach out to us. We'd love to see if it's a good fit. It doesn't matter where you're at. If you guys are making 6 figures of income all the way up to 8 figures of income, I guarantee there are ways that you could be better optimized in the form of deductions. Thank you for joining us. I'm excited to continue to bring the valuable insights of tax savings to you. If you got any sort of value out of this, please leave us a 5-star rating and review. Share it with a friend. And until next time, God bless you and keep moving forward.